Hey, Edmonton YEG Market Minute here. Crazy to think that we're already 1 month into 2022. Lots of things going on in the real estate market, and so I wanted to cover them here really quick with you in the next couple of minutes. My name is Jason Beattie. I'm your realtor with eXp Realty because your move matters. I'm going to talk about specific stats that have occurred last month, so January 2022 in Edmonton. I'm going to go and discuss some of the outline influences that are helping change the way the market is going. We're going to be able to get a little more information specifically on your neighborhood in the market. And I also want to share a property with you that is really unique in the city. So it is a property with 2 basement suites, great location for easy access to transit. So the rentals should go well for you. And so I want to share a little bit with that with you. So once again, let's take a look. So if we're going to look at the stats to begin with, these are the January stats for 2022 from the Edmonton Real Estate Board. 2 things, we're going to focus on the green, and 2 things we're going to look at is supply and demand. So if we look at supply, that deals with the listings that are currently on the market. The number of new listings, so this is what we're looking at, is the new inventory coming to market. So in January, we had 1,681 new properties come to market. And that's a massive increase compared to what we saw in December. December of last year, we saw limited new inventory, but an increase in sales, where this month we are starting to see some inventory increase. It's actually a 62% increase over last year, over December. But then the next interesting stat is year over year. January of this year had less new listings come on the market than January of last year. This is a trend we're going to have to follow because that's going to deal with the supply issue. If we have less homes on the market and the demand remains strong, then it could mean there's upward pressure in pricing. Let's look at the demand. So in January, that's the green button or green symbol just to the right, the sales. We saw 992 sales in January of 2022. Now, that's a little increase over December. So remember, December we had limited new inventory and an increase in sales. This month, we have more new listings, but we also have an increase in sales over December. It's almost a 3% increase. Now, the big one, though, is January of this year to January of last year. January of last year, we had almost 20% less sales than we did this year. That's a huge trend. So we're starting to see less new homes on the market and more sales. So it's an interesting stat to keep an eye out for. Is this a trend that's going to continue? Because that could force upward pressure. Now we're going to look at, some people speak about average home selling prices. Canadian Real Estate Association realized that average selling prices is sort of a skewed number, and it doesn't really truly represent what's going on in the market. So we're going to start talking about this HPI, this home price index. And so we can see here the benchmark is at 327. If you look at the graph, you're going to be able to see the trend of which direction it's going. The challenge with looking at average selling price or median selling price, it really doesn't tell us what's going on in the market. If we just looked at the median is basically if you had 11 properties sell, what they want to do is take the very middle. So it would be the 6th property. There's 5 more expensive properties that sold, 5 less expensive properties sell. And so what that will show us is which direction the market is heading. Because the median price is increasing, that's telling us that there are more expensive homes selling in the market than on the lower end. Now, what I would like us to do is quickly look at some of these outside influences of what's causing this market to change. So first of all, we're going to look at an article in CBC News. So central banks talk about inflation, but are they losing credibility when interest rates don't budge? Okay, so the Bank of Canada, a lot of people had speculated that the Bank of Canada was going to increase their interest rate in January. Now, there was not a little bit of a surprise, but yeah, I think a little bit of a surprise because we see inflation going out of control. It's really ramping up. The cost of our chicken at the grocery store is more. Our toilet paper, everything that we're buying is increasing. And so CBC goes on to say both the Bank of Canada and U.S. Federal Reserve say they are really, really going to raise interest rates very, very soon. It kind of sounds like the parent, though, that's saying, stop, or I'll say stop again. Don't do that, little Timmy. Okay, so a lot of threats, but we don't really know when it's happening, but it's got to happen soon. It's getting to that tipping point. So with the Canadian dollar surging above 80 cents, 80 cents US last week, there were a lot of people convinced that the governor of Bank of Canada was going to move the first and hike rates, or was going to move first, sorry, over the Americans and hike rates this week, but he didn't. The delay in Canadian rate hike that so many had expected was described by one analyst as a policy misstep. This could fan the flames of inflation and the housing market. So a couple things that I could see happening is the buyers knowing that interest rates are increasing. This could have them move sooner to market than what we had expected. The expectation is that we're going to see rates increase by about a quarter point every quarter, every 3 months. And so that's not massive when we look at one quarter, but when we look year over year, it can be huge. And actually, the reporter sort of called on Macklem on Wednesday at the news conference and asked if he had lost confidence of Canadians after his predictions about inflation proved wrong. He had predicted previously that inflation was going to correct itself. Well, you know what? Unfortunately, it hasn't. So now we're in a point where we're going to have to get a little more aggressive. If we shift to another take, this is the Globe and Mail back from January 26th. Bank of Canada holds off hiking interest rates, set stage for a March increase. So we can see here that the policymakers decided to keep the central bank key interest rate at a record low of 0.25%, where it's been since early days of COVID-19 pandemic. At the same time, they indicated that the economy had returned to full capacity, and the bank's priority now is getting inflation back under control by raising the borrowing costs. The decision marks the end of a nearly 2 years of emergency monetary policy stimulus, setting the stage for rate hikes to begin at the bank's next policy meeting on March 2nd. So we can truly see that the bank is put in a position where even though the economy is corrected, the inflation is still continuing. So we got to get on top of that. The way they're going to do that is increase the rates starting with their decision in March. So keep an eye out on that. Now, how is that going to affect the housing prices? Well, the Motley Fool wrote an article back dating January 21st where they're suggesting that a mortgage rate hike will reduce buying power by 15%. And they're basically acknowledging, according to Canada's fifth largest lender, a steep climb in overnight rates will result in a steep climb for mortgage rates. When the overnight rate was 1.5% in August 2018, the 5-year fixed rate was about 3.5%. The bank added that the rise to the same level would be more than just paying at renewal. It would mean a 15% buying power reduction. So what that is telling me is if today you qualified for, say, $500,000, and you say, you know what, the interest rates aren't going to be that much difference, we're going to wait. Well, if you qualify for 500 today, if they're right and it's a 15% decrease in buying power, that means in 2 years' time, roughly, you're going to only qualify for about $425. Now, also, if we see some of this strong buying pressure, or price pressure that we just talked about with prices increasing, if they were just to increase, say, 6% a year, okay, 6 4s, 24,000, that would mean that a $400,000 house would be worth $450 in 2 years. So when we take both of those into account, that the house today worth 400 is worth 450, and you're going to qualify for less in 2 years, you're only going to qualify for 425 versus 500. The home that you could buy today at 400, you will not be able to afford in 2 years. That's a bit of a scary thought, and so part of that is what, in my opinion, is going to rush some of these buyers to market. Now, if you'd like to see what's going on in your own personal market, in your own neighborhood, what you can do is click the link below. Actually, links to everything that I'm sharing with you today. All the articles, the stats from the real estate board, as well as to be able to get your own market update for your neighborhood. It is all available in the comments. So basically what you can do is you can register to have a market update for your community. sent out to you on a monthly basis or as often as you want. And this is an example of what it would look like in Summerside. So it's going to give you, in Edmonton, I apologize. This is general, but you are able to take a complete look at what Summerside looks like or any other neighborhood. So all you have to do is click on the link below, go in and register, and the market update will update you with what's going on in your neighborhood. So it's going to show you what the average selling price or what the average listing price is. It'll give you some basic square footage information. You're going to be able to see the most popular listings in your neighborhood. Maybe you want to see what the most expensive one is. All of that is available here and more. Now, the last thing I want to do is take you over to our MLS system, because there's a very interesting listing that is up that I wanted to share with you as well. Now, this listing is unique because it actually has 2 legal basement suites. All right, it's listed at $525, and Shauna Kinney with Sterling has it listed. And so if you'd like to see it, let me know. Or if you'd like more information, that link will be in the comments as well. So go ahead and click through. You'll be able to view all the property details as well as the home. You're going to see some updates, including, in the living room. Looks like we have new hardwood flooring. There's some architectural features throughout. We can see the pillars. The kitchen's all been updated. So if you would like to see photos on this property or see how you can actually buy a property that has multiple streams of income in it, we're going to be looking at 5% down on something like this. So probably about, say, $28,000 down, where you can get into a 3-unit property. You're going to have 2 basement suites. Because these are legal basement suites, you may even be able to use the income from these suites as to qualify. Now, because the basement suites are so closely located to transit, it's going to be an easy to rent. There's a number of individuals that would love to be able to just pop right out the door and head to the transit. The bus stop is just basically out the door. So if this is of interest to you in any way, click the link below, take a look, and I'd love to show it to you. If you would like to view other properties on the market, just scan the QR code right over here. That QR code is going to allow you to download our app. The app is going to have all the MLS listings as current as possible with instant access on your phone. One of the other great things is their mapping. So one example is you can actually drop into a neighborhood, click on the app, listings near me, and you're going to be able to see all the homes in the area. So just go ahead and scan the QR code if that's of interest. Click any of the links below for the information. Thanks for this week's update on the YEG Market Minute. My name is Jason Beattie. I'm your realtor with eXp Realty, because your move matters.